Hey traders, I am going to share with you how I locked in $3,500 in my funded accounts today. I'm going to share with you the 3 trades that I took and also share with you the trading plan that I created and walk you through exactly how I read the market today. So first things first, if you haven't already, join my Discord because I share this exact trading plan which worked out to the T and how I took my winning trades. I share that in my free Discord. The link is in the description below. And hit that subscribe button so you can watch me trade live because again, I took these trades live on stream today. So you can come trade with me for free. All right, so first of all, the trading plan and how I found it. So my trading plan for today was if we hold above this value area low from yesterday at 623, then I would be taking longs and I would be targeting up towards this 23,900 level. And then if we fell below this 23,600 level and held that as resistance, then I was going to be looking for shorts down to this 23,400 level. And you can see I actually took both scenarios, which I'll zoom in here in a minute. But the red scenario is the one that played out pretty much exactly. And that target right there was pretty much spot on. It's still early, it's still 10 o'clock in the morning, so we still have time. It could go lower, but that so far is holding as support. And that's how I locked in my profits for today. So first things first, I'm going to share with you how I came up with this trading plan, and then I'm going to show you the trades that I actually took to lock in my profits today. So the gray shaded areas, these are higher time frame, high volume nodes, and I use the visible range volume profile to find these, and I mark those off as areas of support and resistance. So on my visible range volume profile indicator, which you can find it over here, visible range volume profile, I'll turn that on, and that shows the areas of high volume. So lots of trading happened in these areas. You can see them over here on the right. These high volume nodes means that there was lots of price action, lots of buying and selling happening in those areas. So when these nodes stick out, that's where I mark off these gray shaded areas and I use them as areas of interest. When they come down to it, it's a possible area for a bounce. It could be support. If it's below that area and it's coming up to it, it could be an area of resistance. And they have worked out really well. So you can see like this high volume node right here, for example, I marked off that level. That was that 23,600 level that I marked off. This next area here, 23,540, it went straight through that level. Price got pretty heavy today. And then the final area that it ended up bouncing on was down here. That was actually on a higher time frame. So if you zoom out to the 1 hour, you can see the high volume area right here, the high volume node. That's why I marked off this level. So the thing with the visible range volume profile is the more zoomed in or zoomed out you are, the price, the volume over here on the right side changes. So you'll need to play around with it, do the 30-minute, 1 hour, 4 hour, the daily, check all of the levels and find the key areas of support. And you'll want to find a couple areas of support and resistance above and below price so that you can build some if-then scenarios like I did, where if it drops below 600, here's some targets that I have to the downside. If it stays above 600, here's some targets I have to the upside. That way you're always prepared to be able to react to whatever price action comes your way. So zooming back into the 30-minute, I used that higher time frame visible range volume profile to find my areas of interest. And then the session volume profile from yesterday, I'll turn off the VRVP, turn on the session volume profile. This is from the New York trading session hours. I mark off the value area high, the point of control, and the value area low. I'm on the 30-minute time frame right now. If you zoom into the 1-minute time frame, that's actually where it's a little bit more accurate, and that's why my point of control is there. The 30-minute time frame, if you noticed, was a little bit different. So make sure you're on the 1-minute time frame when you're actually marking off these levels. And then what I do personally is I turn that indicator back off so that my charts can stay a little bit cleaner. So once I have those lines drawn out, value area low, point of control, value area high, I use those levels to help me figure out my game plan for the day. So value area low, that means that yesterday, the previous session, this is the lowest price that traders wanted to transact. On average, 70% of the trading was done within this range. So to me, if it drops below this level, then price is selling at a discount for the day. On the other hand, if it was to go up and it held above point of control and value area high, then price is selling at a premium and we're looking for longs. So the way I came up with this 600 level for my trading plan today was this value area low was sitting right at 23,622. And that key area of support and resistance that I found from the higher time frame visible range volume profile was sitting right at 23,600. So if, in my mind, if it held above that key area of support, value area low and 23,600 sitting right in the same general region, then I would be looking for longs. If it dropped below, I would be looking for shorts. So hopefully that gives you guys an idea of how I came up with this game plan. Now let's switch over to my chart for what trades I took today and how I locked in my profits. So trade number one was actually pre-market. I took this trade at 5:30 a.m. Central Standard Time, so 6:30 Eastern. It was holding above this value area low, which, if you remember from my trading plan, that was my green scenario, right? So back here, it bounced off of, almost came down to this 23,600, but held above this value area low and it bounced. I usually trade off the 5-minute time frame, so I'll zoom into that. You can see here, it bounced off of that level and it retraced a little bit. So the reason I took this trade is the risk to reward was good on it, because if this green scenario played out, originally I had my stop loss below this wick, and I was targeting up here at VWAP, which at the time when I entered the trade was around 23,700. So that was my original entry and target. As price moved along, this was not showing a whole lot of strength. So I stayed in the trade simply because the idea was that's what I wanted to do. But the price was not showing a whole lot of strength. At this 7:30 Central Time candle, that's when we had news release this morning, and there was a big pump. I exited at 23, actually I had my entry exit down here at this wick high. I set my take profit here, moved it to 676, and that's where I got out. When we have a big pump or dump, like a big move like that during news, I like to get out fast because it does not mean that price is going to continue in that direction. It could retrace, which is actually what happened. So this is the trade that I took in my trade day account, and that's why I took it. Once the market opened, I'm going to zoom in a little bit here because my first trade was actually a loss. And it happened really quickly, so you can't really see it unless you're on the 1-minute time frame. But I was still thinking green scenario at this point. It was holding above this 600 level. It was holding above value area low, and I was thinking longs. Obviously, I was wrong. I took a loss here. And I should have been a little bit more patient because the reason I entered was right here on this 837 candle. You can see that there is a pretty good wick. So I wasn't super patient. I saw the wick and I entered, but if I had just waited for this 1-minute candle to actually close, it closed red and it closed below this anchored VWAP. So if I had been patient, I wouldn't have entered. But small scratch, I took a small position, took a loss there. On the next trade, we dropped below 600. So the market opened pretty bearish. You can see here on the 1-minute time frame. Zooming out to the 5-minute time frame, this was the market open right here. So lots of red candles. The market opened bearish. And then once we dropped below that level that I had marked off at 23,600, and we dropped below the 15-minute opening range low, that's when I entered short. So entered short here at 23,584, and I scaled out along the way. So I took some off at 23,530, because that's where that high volume node was, that key area of support. I took some off at previous day low here at 23,488. And then I took off a little bit more down here at 416, 402. So if you move this down, my final target was down here at 402. I had one runner left and ended up getting trailed out on my stop loss there. So that was the trade that I took in my top 1 futures accounts, and it ended up locking in $700 almost. But that was after taking one loss of about $150. So ended up green on the day there. But hopefully that helps you guys kind of see the whole picture of how I set up my trading plan and then how I actually follow that plan. Sometimes I take losses, sometimes I take wins, but it averages out. As long as I'm following my trading plan, I can feel good about my trading and I'm not flip-flopping back and forth. So comment below if you have any questions at all. I'm happy to expand on some of this, but hopefully that was helpful, you guys. Again, like and subscribe so that you can watch me trade live, and then join the Discord so that you can catch my trading plans and start following along on this journey. Take care.